Organization of Petroleum Exporting Countries, OPEC, has finally agreed on its first cut on oil output since 2008. Saudi Arabia accepted a big hit on its production and agreed that Iran freezes output at pre-sanction levels. Brent crude futures jumped 8% to more than $50 a barrel on the news. Of course, Saudi Arabia would contribute around 0.5 million barrels per day by reducing output to just over 10 million barrels, while Iran would freeze output at close to current levels of just under 4 million barrels per day. Now, OPEC said it would exempt Iran, Libya and Nigeria from cuts as their output has been crimped by unrest and sanctions. Well, let's get some more insight from Guy Henderson. He joins us in Vienna. Guy, as always, welcome to the show. So it looks like OPEC finally has a deal to cut production finalized, with news that even Russia is on board. Now, give us an update on the talks and, of course, how the agreement will possibly look like.
Well, a few days ago, Goldman Sachs, one of the big analysts advising markets on the likelihood of this deal, rated the chances of a deal about 30%. So the fact that this has come through and at the last minute after a full day of talks would have a few days ago been seen, I think, as a big surprise. The Secretary General in a closing press conference here said it was a great success, and as you'd outlined some of the details there, 32.5 million barrels a day is the reduction in output that all OPEC members have now committed to. We knew that back in September. What wasn't clear and what's been wrangled over since then is exactly how that would happen, how that cut would be shared amongst the members. Saudi Arabia, I mean, the full list is yet to be released of each country, but from what we understand, Saudi Arabia has agreed to cut by 486,000 barrels a day, something it says will be a big hit. Speaking to analysts here, they seem to think that that is about in line with its current market share spread across the other OPEC members. Iran, as you say, another country that has committed to a freeze in production, not a cut, but a freeze at about 3.7 or so million barrels a day, nearing what it sees as its pre-sanctions levels, because of course it argues that it's on its way back, its oil industry is on its way back and recovering. But a big part of this commitment as well coming from non-OPEC countries. They have committed apparently to a reduction, quite an ambitious reduction, or certainly how analysts see it, of 600,000 barrels a day.
Well, Guy, we're already seeing oil prices reacting positively to that news that OPEC finally agreed. Deal or no deal, what is the outlook for the oil price?
Well, as you say, Brent crude, which is one of the big international benchmarks, leapt as soon as the deal or news of the deal began to be reported, which often comes before the official press conference. Delegates walking in and out of here and leaking various details from the meeting to the media. It leapt 8% or so. But there is one important potential glitch which analysts in the building are talking about here, and that is that this entire deal seems to hang on the commitment of non-OPEC countries. So OPEC members are unlikely to commit to this production cut target unless that 600,000 barrel a day reduction that has been pledged in principle by non-OPEC countries, unless the non-OPEC countries are able to exactly explain how they plan to do that. Now we know that Russia is likely to commit to about half of that 600,000 or so cut, but what we have absolutely no detail on at this stage, it seems, is who else will make up the other half of those cuts, and indeed officials here said that was yet to be finalised. So there will be discussions on that over the coming weeks, and that could actually have an impact on whether this deal ever takes effect at all, and therefore obviously would have a significant impact on bringing the price of oil down again.
Well, we'll certainly be watching that. Many thanks, Guy, for those insights. Guy Henderson joining us in Vienna.